Hey traders, welcome to Charts and Coffee. We are in that glorious time of year where the sun comes directly through the office window. Obviously less than ideal lighting, but it's great to be here with you. Happy Monday, everyone. Hope everyone had a good, relaxing weekend. Spent some time away from the charts and are ready to get back to it. So time to do a little caffeinate and dominate and see what the market has in store for us. Now, before we get to price action, before we get to the questions, definitely want to keep an eye on what we have coming up this week. Normally, the week after non-farm is kind of quiet. Not this one. We have a reprieve today, which of course is going to be dominated by the headlines of what it is that Treasury Secretary Yellen outlined on Face the Nation on Sunday morning. We're seeing the aftermath of that and just hopefully the wind down, at least of the most acute part of this SVB, the Silicon Valley Bank narrative. All right. It's a narrative. It's a regional bank narrative. It has the ability to be a much larger story, but in and of itself, it is a two banks that are part of this narrative. And obviously the concern is something small gets much larger. I think we're going to see a lot of that coming today. So once we get through today, then we get to data. And the data begins with the CPI tomorrow and continues on. If you didn't catch the Raghee report yesterday, Sunday evening at 6 p.m. every week, we have the Raghee report. And that is where we kind of went through the calendar. But gang, it's just one thing after the other, Tuesday, Wednesday, Thursday, even into Friday with the preliminary University of Michigan consumer sentiment. So a lot to focus on. ECB on Thursday. So we have a lot of hot zones this week that can affect the macroeconomic look. Inflation, jobs, growth. That's going to be obviously the main pillars to watch. Anytime major central banks have something to say, obviously it's going to be a needle mover. The ECB, of course, is going to move the US dollar. So heads up for that. All right, jumping on over into the charts, just a quick look at the big three. Three things we can look at to make it really easy to understand what kind of mood the market is in. It's just a way to take a quick pulse on what's going on. So first of all is the S&P. Are we making significantly lower lows than what we saw on the 10th? We are not. Certainly a little bit more heavy than we were earlier this morning, but nonetheless holding, which I would think is a bit of a win considering what happened on Friday. The euro is an inverse look at the dollar. The euro is generally up, the dollar is down, and the euro is for the most part up today. But remember, as we go into Thursday, the euro is going to move for reasons of its own. The euro is going to move because of whatever it is the ECB is going to do Thursday morning. But for now, great inverse look at the dollar. And then finally, bond yields. Yes, bond yields will continue to drop. People are going into bonds. And as they go into bonds, obviously yields are lower. And we know that real yields, the difference between the nominal yield of a bond and the rate of inflation, as yields drop, that chasm between the fairly steady inflation rate, pretty much flat. It might toggle here and there, but we see that yields are coming down to meet it. That chasm between the two is narrower. That sends gold higher. And therefore, directionally, it is better to be looking at gold. It's a better, clearer environment to trade gold when it's moving with ZB. So if GC is moving with the long bond, then we know we're probably looking at a more predictable gold environment. So keep that in mind when you're looking at the big three, euro bonds and the S&P. And then, just kind of throwing in a fourth in this morning, which is gold is going to be tracking with that narrower real interest rate or real yield. All right, let's kick it off with our first question here from Kevin. Happy Monday. Absolutely. Schwab seems to be getting punished by the bank fallout. Everything, Kevin. There's not much that got a reprieve from what we saw on Thursday, Friday. Not much, right? So once we have sort of a broad-based sell-off in regional banks and in the banks within the XLF, which, by the way, there is no overlap there in terms of holdings. It was just a widespread financial sell-off that affected banks like JP Morgan when, in fact, they really shouldn't. I would steer clear of KRE. I would steer clear of the Russell because of its weighting with KRE. However, if anything should start to right the ship at some point when the financials panic. Gang, remember, panic is not about common sense. Panic is, oh my gosh, get me out, right? So that's panic. Is there anything that's a relative outperformer in this panic? I would say American Express. But if there's anything that looks uglier than most, I'd say Bank of America and Schwab, Kevin. But I'm going to steer clear of financials until sort of this panic-driven selling in corners of the market that, frankly, don't have anything to do with SVB are out of the way. Remember, SVB did not have to go through the stress test. They lobbied themselves out of that. They're a regional bank, so they got to avoid a lot of the sort of report card that these banks have to undergo. That was the 2010. What the heck was that? I'm completely drawing a blank right now. But in 2010, basically, what we have now are in that post-2008 environment, these banks are scrutinized a whole lot more. So I'm totally drawing a blank on that. But whatever that bill was called, it'll come to me. So I would steer clear of the small caps, Russell, steer clear of KRE, and at least for a session or two, let's see how what it is that Yellen has proposed, what it is that's going to happen. Let's see how it lands, right? Let's wait for the dust to settle a little bit more. I think the first sign is that the broader averages, namely the Dow and the S&P, level out because of their disproportionate weighting of the financials within them. Okay. All right. So next up is, and if you're going to look at the weekly, I would say the same thing. Kevin, let's give it a minute, and then we'll definitely revisit it. But I'm not going to make any big decisions until we get some clarity in the next session or two. All right, when do we roll from the March contract to June? Today, Derek. So there is something called the roll date. You can get that from the CME, and I believe the March contract is today. But more so than that, I would definitely make sure when you are looking at whatever platform you're on, once we get to the roll date where we move from H to M on the futures contract, currencies, indices, treasuries already rolled. The long bond has been in the June contract for about a week now. So the roll date, and I believe the roll date is today, right? Is today for the triple witching on Friday. Now, the easiest way to make sure that you're on the correct month is make sure you, from time to time, you check I know for me, I pulled the continuous contract up a lot, but as we get closer and closer to expiration, roll date, I got to make sure that my platform and it has rolled, or sometimes they roll a little bit earlier. So make sure you're on the right contract month. Just look at the continuous contract. For example, this is at 38.68. Pull up ES H23 to see where it's trading. That's 38.36, right? And I just mentioned ES is trading about 30 points higher. So we know at this point, when I look at my TOS platform, okay, the continuous contract is now reflecting that June contract month. All right, so moving on to our next question. We did cover gold, Robert. Yeah, I would definitely, I never buy new highs, right? So let me get to the other part of your question. Moving to the upside, should we buy here, wait for a pullback? Robert, if you've been watching this show for any period of time or any of my work, I will never buy new highs. Now, how much of a pullback do we need is the question, right? The DPMR looks beautiful. Take a look here. Where's my drawing tool? The DPMR looks fantastic. Look at the 1 hour chart in a gorgeous green uptrend. That is what we want to focus on here. Take a look. Green, and then we have our DPMR zone, and I'd like to see a quick pullback either to that or to the wave. The wave would be the mean reversion. I'd love to see a mean reversion. That'd be great if we do get that as well. Both are valid. One's based on price. The other is based on volatility, of course. And either will do. Look, in a green environment, we want to buy the dip, right? And that's exactly what I'll do there. So never will I buy a new high. That's not what I'll do in the context of a trend, which is what we've got on that 1 hour. And if you're wondering about breakouts on gold on the daily, if there was a breakout to be had, it was likely through the Darvis at about 1865. That would have been back on the 10th. All right. So clearly we're well above that. It would simply be chasing now for me. All right. Next up, just in case of a bank run, where to park emergency funds. I'm thinking of Treasury only more. Praveen. Look, I appreciate the question. There's no reason to panic here. We're not even, I just, here's what I would say. If you're thinking about that now, I'll be honest, it's too late. I don't think in that way. What I'll do is I'll just focus on what is going to be moving higher as, say, the S&P is moving lower. A lot of this has to do with longer term versus intermediate versus short, right? Is this an investing account versus, say, trading? So I'm not the one to tell you where to put your money. I will tell you personally that, I like rolling things in T-bills. I've done that since, frankly, I was a kid. I was told a long time ago, get a set amount of money, just keep rolling them. And I've done that forever. Look, I'm not the one to tell you where to panic. I don't know your holdings, but I will tell you this. If you're thinking about that now, I would say it's a little too late. But also look at your holdings, look at where they are in the perspective of where we are right now. I am not looking at a bank run, but then again, I can't tell the future. So do what you need to do, obviously, to protect your capital and sleep at night. That's really the only answer. Bobby the Noob, how are you? Good morning. Can you give any insight commentary about the overnight futures? Seems like a big swing, 39.60 to 38.50, trying to understand the temperature and normality of such a move. Well, remember, Bobby, when we're looking at the overnight, right? So it's overnight to us, but somebody's awake, right? There's always someone awake. So when you look at what's been happening, right, where it's really more along the lines of who changed their opinion. Did we have strength in the Asian session? Largely, yes. Did we roll over as the European session opened? Remember, there is a UK branch of SVB, and I don't know what the plan is. The plan in the US does not extend to the UK branch. I don't know if that has something to do with it, because we could see distinctly as Europe opened at 2 a.m. Eastern and the UK opened at 3, it just looks like a rainbow, doesn't it? So if I then step back and say, why might that be moving lower? I may not be completely up on the why. It concerns me more that around 7 a.m. as the New York market's just getting going, we started moving lower then. That's a little bit more concerning, because I would like to see the U.S. markets respond to whatever it is the Treasury has proposed and some sort of progress on depositors being able to access their funds, etc., for the SVB narrative. But as far as the swing, I always ask myself, who's doing it, right? And then also, Bobby, I would say another thing you could do, and this is really easy on TradingView, ask yourself what kind of volume was at the level. In other words, I know a lot of folks will look at overnight, but again, overnight can be kind of thin. So what I like to do is step back and ask myself, say on a 5-minute chart, it's a 1 hour here, by the way, but I'll ask myself in a 5-minute chart, what kind of volume did we get? And what kind of participation does that suggest we had at a resistance level or at a support level. So for me, understanding the overnight is understanding who's awake, because someone always is, and then how much volume occurred at those. You mentioned 39.60 and 38.50 were their volume areas in that zone. That's the way that I'll look at that there. All right, next up, Jet Jockey, great training Saturday. My pleasure, and thank you so much for being there. I appreciate that. It would be nice to have access to DPMR for stocks during the weekend, or is it my setup? I can't do tech here, Jet Jockey. I don't know what you mean, access to DPMR for stocks during the weekend. I would say it's your setup, but I don't know. It should not change. Make sure you've got extended hours. I like to keep that on, right? So I'll keep the extended hours on either platform, and make sure you're also using a platform that's going to give you data, right? So if you're on, for example, TradingView, and I'm having to speculate, Jet Jockey, but this might address some other questions relatedly. When you are in the TradingView platform, for example, make sure you've got access to the data, right? If it's futures, especially, so you need the feed in order to get the data. So on extended hours, two, make sure you've got a live feed, and that probably will start to help out there. All right. And thanks again. And again, your DPMR should show up, Jet Jockey, when the Globex starts, which again, if you're looking at GC futures, make sure you've got a live feed. If it's delayed, if it's the free, it's going to be obviously not up to date. So, but when the Globex session starts, that the DPMR will kick in. All right. Next up is, let's see. Let's see here. Jim says HSBC is supposed to be buying UK. Okay. Yeah, I haven't kept up with the narrative much, gang. It's funny. I try not to get too down the rabbit hole with these narratives, because at some point they get emotional. They start delving into editorializing in a lot of the newspapers and financial media. And, all I know is there's a panic. And all I want to make sure is I can measure it somehow. Measuring is, who are the members of political branches? And yes, of course, Treasury, FOMC, these are political bodies, right? Who are those people that are speaking up that can move the needle in the perception of what's happening? That's about as deep as I'll get, because otherwise it can really turn into a spiral, and I try to avoid it. So if there is a narrative where UK has some sort of, the UK SVB has someone swooping in, fantastic. That's going to be one less thing to worry about, right? That's the way that I'll look at that overall. All right. So before we wrap up here, let's since we've talked about the Federal Reserve so much, let's just jump on into the FedWatch tool just for a moment to know where we are as we kick off the week, especially for June, the June meeting month. Gang, we continue to see, look at this. This is dramatically lower target rate probabilities than just last Tuesday. Dramatically, gang. Does this start to move back up once this, I'll call it a mini crisis, because that's all it is for now. Anyone who traded through 2008, I don't mean history books, had skin in the game and was trading or investing, that this is just a micro blip compared to the scale of that issue. This is not that. All right. This is not that. These regional banks can skirt the legally, the stress tests. Okay. So will we see less hawkishness? Well, that's what Fed fund futures are looking like right now. But let's see, after we get through some of the initial panic, if these start to indicate more of a 5 to 5.25. But gang, these are significantly lower target rates for the Fed fund futures, which is suggesting that overall, the idea here, based on the Fed fund futures, right? Based on the Fed fund futures, the overall idea here is we're likely to see fewer hikes, at least in the near term. This can, of course, change. All right, gang. With that being said, I will see you all tomorrow, same time, same station. Have a great morning. Be careful, gang. We're still in a very prickly area about what it is financials are going to impact. Remember, most significantly, KRE, XLF, the Russell, the Dow, the S&P. I'll be focusing a lot on tech going forward, at least until this dust settles. Be good to each other, gang. Talk to you tomorrow.